Okay, that's the vision from Titan. Clearly a structural story, picking up on more and more women joining the workforce, their spending power increasing, and they want to cater to the entire spectrum. But what about EID Parry? Let's chat with them about how their quarter has been. We've got Muthu Murugappan, the whole-time director and CEO at EID Parry, joining in on the show right now. Muthu, hi, great to have you on ET Now. Thanks for your time. Monsoon has been pretty good in both Karnataka as well as Maharashtra, and the industry is expecting a good crop this year. Given this, tell me, what are your expectations for the sugar business and any plans of increasing crushing in the next season too?
A very good morning, Aisha. Thank you for having me on the show. Yes, monsoons have been good in the key sugarcane growing states. So we're looking forward to a good crush in all of these states. Of course, our operations are in Karnataka, so we're certainly looking forward to a good crush this upcoming season. We also have operations in TN and AP, and there I think cane planting has been a little subpar. So this remains a bit of a challenge, but Karnataka, we're quite hopeful this year.
Morning, Mr. Murugappan. But what about the refinery business then? Because a lot of capital has been used for debt reduction. Now, what's your roadmap to strengthen the refinery operations?
So the refinery operations has done well in the first quarter. I think we had good operational efficiencies come on stream. We also had better cash premiums. We were able to upsell some of the volume. And also, of course, as you mentioned, there has been debt reduction. So on the back half of the quarter, interest costs have come down. So we have a stable outlook on the refinery business going forward for the rest of the year.
And Mr. Murugappan, on the ethanol front now, we understand that the government has not hiked ethanol for the last 2 to 3 years. Any representation that you've made to the government in light of this, and what are you expecting on the ethanol price hike front?
That's very correct. We haven't seen an upward revision in molasses-based ethanol pricing for quite some time now. The industry has made quite a few representations to the policymakers. With a good sort of cane crush in the upcoming year and an abundance of sugar expected, we really hope the policymakers will consider this positively.
Right. Let's now focus on what's really happening with your consumer products group, right? The sweetener category. Tell me, what is your strategy here? What's the longer term vision? Where could this business actually head in the next 3 to 5 years? And are you focusing on more value added products? Are you also looking to launch new products? Just wanted to understand the whole portfolio strategy.
Sure. So I think the portfolio strategy is really that of food FMCG. I guess we had a start by virtue of being in the sweetener space, more on the commodity front. But we've obviously now refocused that effort to building a branded business. So it started off with sweetener, that's our core, and now it's really expanded to the food space at large. So growing out in the sweetener space is certainly one part of the strategy. The focus is very heavily on value added and on building distribution. If you notice our commentary this quarter, the browns category has shown about a 33% growth, and I think this trajectory will continue. This is the value added space on the sweeteners front. On the staple side as well, we've expanded into millets and pulses and rice. We've done some vertical integration on the pulses as well as on the browns. This will give us better quality control and also enable us to have some margin capture. Going forward, this business is slightly under 1,000 crores now. If you look on an annualized basis, our intent is to focus resource allocation now on this business. That now that the biofuel resource allocation or capital allocation has been completed, and I think it's our endeavor to build a substantially larger business as we exit the decade with a good single-digit EBITDA margin. We're really looking to the food FMCG space. And we're looking at a regional play in the southern markets for this phase of our growth.
Right, but Mr. Murugappan, once again, just wanted to touch upon your refinery business. While the capex has been done, when do you expect that to start paying off? You did say that you expect a stable performance, but if you can quantify or rather help us with any growth number that you are looking forward to?
So there hasn't been much capex off late on the refinery business. There's of course been debt reduction we've done. We don't foresee any capacity expansion on the refinery business. I think we'll really focus on running the refinery efficiently. The capex has been done on the distillery segment, which is really on the back of the ethanol blending program. And here we see we've had good volume growth on the ethanol side on the back of the program. We've had some downsides on the ENA volumes. That's due to local regulatory issues in TN, and that should straighten out in the coming quarters. Where we are a little subpar on the ethanol, or on the distillery segment, is on margins. And I think we spoke earlier about being hopeful of upward revision of ethanol prices. This would certainly help EBITDA margins, which are now lingering around 12%. It's the same if you look at sequential quarter on quarter. But when we set up when we expanded into ethanol, we were really hopeful of closer to 20% EBITDA margins.
Right. And lastly, just want to quickly touch upon your debt picture at the profile, because your short-term debt has gone up in the quarter gone by. What has led to that, if you could help us understand? And also, when sugar crushing starts in quarter 3 and quarter 4, is there a chance that this debt could inch up even higher?
So the short-term debt has gone up, because we've had lower cane crush in AP and TN for last year, and it's very likely this year as well. This has resulted in a shortage of molasses. So we've had to insource, a lot of molasses, and this is a call on working capital. Also, with our staples business, we've done some strategic buying of raw lentil. This has also led to some sort of short-term debt coming on board. So I think this we're not too concerned about. It would, even at the sort of exit this year, probably lower or remain at these levels.
You've got about this 56.1% stake in Coromandel International, and Coromandel stock has done rather well, a good 50% in the last 1 year itself. Any plans of stake reduction further?
No, Aisha, no such discussion at this point.
Okay, great to chat with you as always. Thanks for your time on ET Now.
Thank you for having me on the show. Thank you.